Hey, welcome to the exchange. Let's talk housing. Are we in a bubble, and what are the risks if it flips suddenly? So let's look at how a housing crash would happen. So obviously you have institutional inflows or cash inflows in the real estate market. They're buying up all the homes. I mean, the numbers are actually getting pretty large overall too. It's getting a pretty crowded trade. But look at the market right now. We have a high inflation environment, a low foreseeable growth environment in the near future. What's going to happen? Also, too, as housing mortgage rates increase, it's going to drop valuations for those houses themselves, which would be an interesting change of pace there. So, really, the question to ask is, hey, if inflation corrects, if inflation actually does go down, either by force through the Fed raising rates or naturally as supply chains kind of unwind a little bit in early part of 2022. What's going to happen with these actual real estate, basically real estate investors in the housing market right now? Are they going to stay in the sector and maintain the cash in there, or are they going to exit? And the problem is if they exit fast, it can get a massive increase in inventory across the entire U.S. market. At the same time, we're going to have existing demand or work in progress, basically building, actually come at the same time, either this summer or this fall, to really meet that inventory that's already in the market as well too, which could cause a massive glut of supply on the one side with very few buyers on the other side, which could cause prices to really crash pretty fast, potentially this summer and this fall. But let's look at some of the numbers going forward and look at how this might happen and where the actual money is at. So obviously we all know the big fears of housing, what's been going on with labor issues, construction issues, supply chain shortages, et cetera, been going forward. Also record low rates driving, record demand, coming out of the post-COVID era. Also too, even during COVID, people want more space, more bedrooms, work from home offices, et cetera. But I pulled up here. This is from Redfin. They do a quarterly report, and this is really driving what's driving some of the actual in demand side. So this is actual real estate investors, so like corporate investors buying actual like retail homes or basically single family housing homes. So this came out last week from Redfin.com. They publish it quarterly. This is from Q4 as of Q4 2021. So this is the chart, actually the money slide right here, money chart. So you can see this massive drop off beginning obviously in COVID when it first began, but really this large spike. Right now we hit 18.4% nationally according to Redfin in Q4 2021. I mean, just it's a huge spike up, which is well above historical norms. So you see historical norms sitting at roughly 12, 14%. Back in the 2000s, roughly around 8%. So this is roughly a new thing really for the real estate market in general, having strong corporate backed demand driving some of these real estate cash inflows, which has definitely been a change. This is actual a bar chart here you can see. So this is looking at actual home purchases on just a unit basis. I mean, again, record numbers we've had in 2021 and even in 2020 you saw that really lift off there. But 2021 was really what kind of launched for the moon right there. So it's definitely been a change. But what's happening is it's driving up real estate demand, which is driving up obviously prices across the board. So this is a cool thing. This is from Wall Street, the Washington Post actually. This is from last week. Basically, you can go. I'll post an description too, but you actually go in down here and actually look at your metro area and see, hey, what's the percentage of homes bought by investors, basically in the past year. So this is from Atlanta, Georgia. And you're seeing like these metro areas. The dark brown you see here is 30% plus. I mean, it's just massive numbers coming. This is all metro areas across the U.S. So the Redfin data, when we look in here, it was the 18%. This is a national average, but in the metro areas, it's much higher. I mean, we're seeing that 25, 30% being more than norm potentially. So it's definitely a change. What has happened in the past, but we'll see how it affects the future. But it's definitely been a huge shift, and it's a huge risk factor. I pull this chart up here. This is another myth that kind of going around. It's all foreign money flowing into the U.S. real estate markets, which is not entirely false because you are seeing some uptick there, especially as it come out of COVID. But really, the past 4 years, we've seen a steady decline in actual property sales to foreign buyers, which this chart shows right here. So it's not the driving cause, but I mean it could be a possible tailwind coming out of COVID. But we'll see what happens with that. Hey, so this is a release from last week. It's from census.gov. It's basically their monthly housing report they do, and they're just every month. So this came out on the 17th. Really the big takeaway here is new residential construction in January 2022. So basically it's broken down into three different categories. Basically building permits, like what's permitted, but you hadn't started. By started, I mean like laying the foundation, putting up the beams, installing plumbing, etc. That's basically considered a housing start. Housing completions, obviously it's finished, it's ready for inspections, ready for the buyer to take control of the property, etc. But you scroll on here, so this is the actual housing permit. So it's basically planned, but not yet started actual work right here. So you're seeing strong growth of permitting for both. Actually, let's break it down first. It's actual the one unit housing, basically single family housing. Then there's 2 to 4 units, almost like a duplex housing. And then there's 5 or more, which is basically multifamily housing. I think like apartment buildings, etc. Really seeing permanent growth. Actually a decline in actually single family housing of -5%. Which really is surprising because if you see right there, you're thinking, hey, if the housing market's so high, we're making money so much for construction and contractors, everybody else, why don't they build as much as they possibly can? But the issue they're having now is really that, supply chain constraints, labor constraints, they just can't build more. They're physically at capacity, and that's why you're starting to see the permits actually dropping. But hopefully this increases coming out of COVID, or the Omicron variant, coming out of really the COVID in general, as it becomes more endemic, hopefully. But again, you're seeing strong growth in multifamily housing, 18% for 2 to 4, and then 5 more units looking at 12%. I mean, just massive, massive numbers. You got to remember, too, U.S. population growth is only 0.35%. It's not like we're growing that fast as a population across the U.S. Let's scroll down and look at actually work in progress. It's basically houses started but not yet completed. And what you're seeing here is really the cause of the problem for the actual housing backlog. I mean, look at the year-over-year growth rates from January 2022 to January 2021. I mean, it's just massive, 37% on average growth rate. So one unit single-family housing, 32%, multifamily, 43% and 52%. I mean, just massive, massive numbers. And you think about the supply and demand imbalance, like, hey, where's all the houses at? Where's all the properties at? Really what the problem is, they're actually still work in progresses right now. And that's why, again, as supply chain eases and labor constraints ease going forward, this should come on the market very, very fast, which should help basically make more of a balance of supply and demand forces in the housing market, which hopefully should alleviate prices for both owners and for renters going forward. So let's look at actual housing completions. Again, these housing work in progress, massive, massive numbers. Housing completions, not that great though overall. Looking at here, it's negative 2.4% year over year for single family housing. Multifamily housing, 8.7%. Still a massive growth in 2021, but not quite the massive numbers. Really, what we see here is until we solve this work in progress supply chain issues in the housing market, and also as well as labor issues, we're not going to have that massive, basically, rebalancing overall. But it will happen, though. The question is when. Whether it's this summer or this fall, but it's going to happen. It's going to be a massive shock for the global economy and for the U.S. economy. Okay, so what's the so what here? So the big issue we have here is we have an existing pipeline or backlog of houses basically in progress, multifamily housing in progress. So unlike for most investors, you imagine like stocks and bonds, if you want to sell, you can sell very quickly. There's a liquid market there. With houses or commodities, it's a little bit different though too, because you can't just all of a sudden liquidate your entire inventory of houses. You can't just get it off the books, overnight basically, like a stock or a bond. You just can't, like a fire sale scenario. I mean, it could take weeks or months to basically offload all these houses off actual balance sheets for all these various investment firms. So the issue you're facing there is if, let's say, either inflation turns south. Let's say, hey, inflation is not as big a fear. Let's say it peaked out in February. We're heading downhill. Now, obviously, the Ukraine crisis is still happening, so we'll see what happens with that. But eventually, inflation will head down south, whether either by force through the Fed or naturally through supply chain issues easing up a little bit too. But the big thing what's going to happen here, is we're going to have sudden a crash of inventory come on the market potentially this summer or fall. And how those real estate investors actually get out of the positions fast enough if they want to, potentially. So the big issue is if they get out slowly, I mean, it's no problem there. They're selling and buying and the market's in equilibrium. Whereas if they get out fast and have the exits very, very fast, either A, there's the financial crisis we have happening and they just want to get out of the real estate market entirely, or B, potentially looking at the other side, is, hey, maybe there's some other, maybe the gains in housing are not quite as high as they thought they would be. Maybe equities take off again. We have a second rally post-COVID coming out of COVID, and they want to get out of the housing market, basically take that cash and invest it in other places, whether it's stocks, bonds, mutual funds, whatever else it might be. And that's the big risk you have there. So I think we're looking at this. I mean, we're in this really weird limbo stage where we have this massive capital flight to housing, but these fears, I mean, right now they make sense. So, but I mean, even by the summer, it might be a whole different scenario where all of a sudden you have a whole different market there, and people don't want to be in housing necessarily with large cash flows and large, basically balance sheets in housing or basically residential housing. And also, if you like the video, hit the like button as well too, and hit the subscribe button if you like the channel overall. But thank you and have a good day and crush life.